So good morning, good afternoon, good evening traders, wherever you are in the world. Victor here. In today's video we're going to be looking at trends or market structure or whatever you want to call it. Now the ideal knowledge everybody has about market structure is the market is usually moving in an uptrend. For example, it's going higher, high, higher, low, higher, high, higher, low, which is also part of the Dow theory of structure. Okay, Dow theory, higher highs and higher lows. Or the trend is what? Lower highs, lower lows, or the market is in a range, which means it is what? Moving sideways, okay? No particular direction. Alright, now that's the concept most people have, and you hear a lot of investors saying buy low, sell high. That mentality, and I'm going to explain why that mentality and mindset is not going to give you profitability in the forex market. For example, if the market is trending higher, instead of you to look for a way to get in at the top here to go higher, you are trying to sell back the market into this maybe demand zone or maybe trend line or whatever I call it, and this might end up taking you out, and it's part of the things that fucks people's trading up and doesn't actually allow you to have an edge in the market. Okay, so you need to first of all understand the trend, and any other thing you do can work. Okay, a lot of people say they are trend following, but are they really trend following? People end up what? Just buying and selling at random points with the thoughts that, oh, we're in line with the trend, we're in line with the trend. Now we're on the AUD USD time charts, and I just moved to the 1 minute time frame, so we'll be able to what? Look at trends and then what? Discover how trends actually move. Okay, so just looking at this market simply, I could take my highlighting tool this way and highlight this leg of price this way. Okay, that's a very clear bullish push, and I can also highlight this leg of price this way. That's a very clear bullish push, if you would agree with me. Okay, just hold on a second while we proceed. Now there are a lot of trading strategies. Okay, you're gonna be like, oh, if it breaks lower, you buy back into the supply zone this way, you buy this price this way, buy it back into the supply zone, and then what? Sell it lower. Okay, now most of the times when price is already in a trend, I'm going to teach you to buy high, sell higher. Because a lot of your traders are going to be like buy low, sell high, or buy high, sell low. Buy low. Let me draw that out for you. Buy low, sell high, or buy high, sell low. Okay, so or sell high, sorry, and then buy low. So these two models tend to fail a lot of traders, and if you tend to think about trends in this manner or in this way, you're going to end up in the long run losing money or not being on the right side of the market at most times. Okay, now observe this market here, and I marked out this bearish push to the downside. Now if we wanted to mark out zones depending on our strategy, this might be a good zone for us, this supply zone right here, or resistance level right here. Now there are a lot of traders taking away their mindset from the fact that the market has already begun to become bearish. Okay, why is it bearish? I'm not looking at the general trend, I'm just talking about this particular section of the market. You can see the break of structure here and the second break of structure here, so it's clearly putting in bearish moves and trying to show bearishness. Now why thinking in a mean reversion way or kind of strategy, you're trying to buy back from the low to get to the high instead of looking for the best sell opportunities. Okay, don't get yourself confused. It's not bad to look for buys, okay, if you know how to confirm them properly, but always keeping that mentality, or always keeping, we need to buy back into the supply zone, we need to buy back into the zone. Imagine the zone was here this way. Now as the market was moving to the upside, a lot of traders have already changed their bias to bullish, not even understanding this major push leg to the downside. Now once the price started going higher, you can observe what price did. It made a low here and then did something that looks like a break of structure. It's not really a break of structure, but it looks that way. Now after this has happened, most traders will now be looking for this zone to buy the trade back into this upside, or they'll be looking at this zone down here, looking to do what? To buy this market into the supply zone before selling. Now what they don't discover ahead of time is the trend doesn't always have to pull back to the extreme in order for the trend to put into place. Okay, it doesn't have to. Sorry about that. Now you can see what the trend ended up doing. The market went up, and then some traders might have gotten a little buy here, this way, a little buy, and then what happened? They got stopped out. They'll be like, okay. Now we look for this next zone. Our next zone is gonna be hits. Sorry about that. This way, okay. The market knows what you're trying to do. You can see. First of all, hit stop loss, and then it started going up. Oh, we're gonna buy it up right now to get into the highs. Let's see what's gonna happen. Oh shit! It got liquidated once more. And then what? You see price rallying lower and lower and lower from this end. Now, what would have been the correct approach? Because I've showed you the wrong approach, and I know a lot of you will be guilty of this, not looking at the overall trend of the market and just placing random buys and sells and praying for the market, praying that the market goes in your direction, and praying the market hold your zones, hold your supply zone, you mark out, hold, and so on. Now, the best practice for you to do is to look forward, lower time frame breaks of structure to the downside. Okay, for example, if I was looking at this market personally, I'll be looking for ways to sell the market. It will be more profitable for me looking for sales rather than looking for buys. Okay, now you can see from this place, I can draw that out. The market invalidated this high. Okay, what happened next? The market kind of absorbed this high. It didn't invalidate it, it absorbed it because there was a wick. There wasn't a body close. If it was a body close, we might consider that a break of structure, which wouldn't still be relevant in the grand scheme of things, looking at the price action is extremely bearish. Okay, so after that happened, we got a break here, whatever, on the lower time frames. We got a second break here, and it will be more profitable for you looking for sales, because at this point in time, most traders have already shifted their buyers from bearish towards bullish, because the market is inducing them. The market is kind of showing them little candies like children, giving them little tips that, oh, you're gonna get this penny wise, oh, come to me, I'm your friend, and all of that shit. Yeah, so instead of that, we should be the ones riding this trend downwards, looking for any way to sell this market lower. Okay, so it's the concept of sell high, buy lower. So you're actually not waiting for price to always come back into this zone to get short. Okay, it doesn't have to hit your demand zone to get short. So you can, for a way to get involved, is using the lower time frames setup. Okay, lower time frame setups. Now, I just explained that trends do not always have to pull back towards where they began from. I don't want to start giving you all the higher highs and higher lows that you've been getting from the beginning to the end. Now you can see this trade marked up. I didn't take this trade. I would have looked if it was a value setup for me. I don't know if it's a value setup, so most likely let's jump into EU here, and I'm going to be going to the 4-hour time frame for Euro USD, just to be able to try to explain what I'm looking at. Now you can see this beautiful trend here. Even a blind person can see that this is going up. Yeah, it's in an uptrend right now, except it starts giving us bearish moves. I talked about this price action going bullish from this demand zone right here, and I was able to catch a few phenomenal moves, and now it's looking kind of bearish. Okay, so we don't stick to one one criteria. We look at what the market context, the price action, and then we try to provide trades or look at trades that are in line with our analysis. So first of all, analyze these charts, and once we're done with analysis and we discover that, oh, analysis is looking great, this might not be a bad setup, this is actually in line with our trading plan, we take the trade. Now, away from that demand zone we're talking about, you can see this rally up on the Euro USD. And by the way, if you want to get weekly forecast on Euro USD to see where we're trying to take trades from, or what we're expecting the markets to give us, or what we want to anticipate, you can easily subscribe to this channel. On Sundays, I normally give weekly outlooks, so we know what to expect from on the Euro USD pair. Now, back to what the concept we're trying to explain. you can basically see that this price action has been bearish for the longest of time. A blind man can see this. I mean, a child, a toddler can tell you, oh, dad, it's going down. Are you selling? Dad will be like, no, we're trying to average in. We want to buy it from this low. We want to catch the mean reversion. We want to take it to the highs. Oh, we are so genius. And by the way, no one is special in this market. You don't have the magical third eye to know where a few thousand, 100 billion pips can move. So it's best to wait for price to tell you what's going to happen. You're not going to tell price where it's going to go the next 10 years. Price is going to tell you, oh, I'm going to go low. Oh, I'm going high. And you should be there to listen. Now, looking at how this market broke this high, you can see this was the last major high before what? Price started going higher. Now, a lot of traders will be looking at this, and the instant thing that comes to their mind is after this break of structure, price has to come down to this zone. Maybe this demand zone right here. So what is all on their mind at this top side? You can already guess it. You already know what's going on in their mind. Have to sell, have to sell, have to sell, have to sell. Oh, I have to sell, have to sell, have to sell. It's gotta get down here. Oh, please, please. Yes, yes. It's coming down now. Oh, it's coming down. And then what? The market ends up liquidating a whole bunch of them, going higher, liquidating them, going higher, liquidating them, going higher, higher and higher and higher. And what? Wipes away all their accounts. Why? Because they're actually expecting the market to what? Start going lower now. You can even see here, perfect breaks of structure, perfect breaks of structure, and then price is still going ahead of this and breaking structures aggressively with no respect to anybody. Okay, so just breaking structure and then what? Going higher and higher and higher, higher. And eventually it broke down this time around. We're still looking for buys, by the way, but after seeing all of this, we're like, okay, it's gonna come down to this demand zone. Let's get into a little sell. Knowing that the overall target is for this price to continuously become what? Bullish. Even though at this point in time we got this breaks of structure to the upside, price is coming lower, but we still expect price to what? Continuously be bullish. I know this is a little bit confusing for you, but I'm just trying to explain a concept. I'm not teaching you how to trade. I'm just teaching you what? A mindset for what? Holding, getting into good trends, using any of a strategy. Maybe you're using a trend line, you're using a support resistance, which I do not advise. But if that's what works for you and that's how you've come to understand the market, well, that's good for you. But you don't always have to wait for the markets to come down to one particular zone. You can go on the lower time frames. It's as easy as ABC. You can go on the lower time frames, look for what? Lower breaks of structure to the top side. Multiple breaks of structures kind of like depict that the price action is currently looking towards go in the particular breaks direction. Okay, so that's another important fact you should note. Don't wait for pullbacks, as I've always explained. Now I'm going to explain the concept of absorption to you. Okay, concept of absorption. Now let's say you have a zone this way, and then price comes, maybe it's a zone for a higher time frame to come back for mitigation, and then maybe price on the lower time frame plays down, and then liquidates this zone here on the lower time frame, but begins to break up. Now this is why we don't pay a keen attention to placing trades on demand zones. Oh shit, it hit my demand zone. Yes, we buy now. Yes, hi. Okay, are you going there? So I'm sorry about that, guys. I've just been playing so much. Now you can easily see this. Now, why this is gonna be called an absorption is when you go on the higher time frame, you might see the body of the candle closing here, and this below here is just a wick. I hope you guys remember what a wick is. Below here can just be a long wick, but the body closed above here. So if you want to see a break of structure, you want to see the body of the candle closing below this zone. You want to see a body of the candle closing below this zone, then we could call that what? A break of structure. Else, if it's just a wick, it might just be what? An absorption for price to go higher. I meant a wick on the higher time frames, but in the lower time frames it looks like, oh, price action went below here, price action is breaking higher to go higher, which in real time might not be the case. So I'm going to try to pinpoint an example of an absorption for you guys, so easily see it firsthand and you get a good understanding of what it is. Okay. So let me just scout through this. It's supposed to look like a breakoff structure, but it isn't a breakoff structure. It is just, yeah. Now let's take a look at this zone right here. You can see this good supply zone right here, and you can see what happened. Price went higher and did what? Invalidated this zone. On the lower time frames, it's gonna look like, oh, we are bullish. We finally broke it. I told you, USD is gonna rally to 10 billion highs, or to the moon, to the moon, to the moon. But on the when price actually closes, it still forms bearish. And those that were on the right side were looking for bearish moves. Those were looking at this as break of structures and trying to buy this zone, trying to buy the zone lower than this one here. Oh shit, my drawing tool wasn't on. Trying to buy all of this shit right here were liquidated, and their money were taken from them and given to the more profitable traders. So you can see the concept of absorption in play right here. The price, your SNDs don't have to hold to the T. You shouldn't be fixated on some particular support and resistance on trend line holding, because the market always does what it likes. You just have to be there to confirm and get on the best trading scenarios to take price towards the desired direction. So a recap of what I taught: buy high, sell higher, just like I've explained. I'm going to draw that out for you guys. We have a trending market, it breaks high. Instead of expecting it to hit some zone down here, we can go lower and then look for smaller breaks of structure to the upside, and then we'll look for trades based on this to continue going higher. I'm not expecting any huge moves to kind of like come back. Oh, sorry about that, guys. Control Z. We expect price to continuously go higher, and the more likely for it to continue going higher, maybe hitting a fair value gap. And if it was on the sell scenario, the opposite would be the case. We would have to look for price coming lower, having a clear supply zone, but on the lower time frames before hitting it, breaking structure, going lower, and price continuously respecting the bearishness. That's a true bearish move, not just having straight lower highs, lower lows. The WTO is still great, but you have to incorporate it with the modern break of structure, which is not really modern, but it's actually how you should view structure if you don't want to be on the opposite side of the market all the time, looking at mean reversion trades and getting into this kind of stuff. Now, if you want to learn more about trading, you want to be more on the educational side instead of the Instagram traders showing you the small little 1 pip entry and